Hey guys, welcome to my channel. I'm Greg, and I'm going to go over primarily cryptocurrency market, and but I'm going to other markets too, like the DXY, briefly the Nasdaq and stuff, because it all ties together with the cryptocurrency market. So I'm giving you more of the big picture of what's going on in the markets, in my opinion. Okay, so right here on my screen, as you can see, Plan B. Mr. I have over 1 million followers on Twitter. So whatever he says must be gospel, right? So here's the deal, guys. This is what he's saying right here is the assumption, right? Okay, so the assumption is this, and the Fed is going to turn back on the money printers because um, that they care for the federal government, and then what's going to happen is the economy will expand. Basically, people will be making more money, and the government will be able to collect more revenue through tax receipts. Right? That is the theory. If you look at it from that point of view, and that's true. That's true. The government, the United States government, I'm just using the United States. I know there's some of you are outside the United States, but I live in the United States, so I'm going to use that as an example. That this would apply to any other government. Okay, so. And so that's what you would think that they would want to do. There's just no way. And then there's other little things that are going on in the economy that make sense that that's what the government would do is not contract too hard or bring on tightening of monetary policy to throw the economy into a recession, but to soon do this, what Plan B is saying there. So I think that there's a different approach you might want to take. I've been posting some of this about the DXY, the gold, and the Fed and inflation. So taking a look at the, let me turn that off. Taking a look at the Fed chart, you can see right here, the Fed is tightening. It's reducing its liabilities here, guys. It's taking everything off the, going down. So the Fed is tightening. And I think what's going on is, here's the DXY going on up. Obviously, it's going up, and it continues to go up. It's at 112, just over 112. I still believe it's in a topping pattern because obviously the RSI is telling me that. And so if you look at it from a world government point of view, not a world government, what I want to say is that you have the United States economy, and then you have what the Fed is looking at as overall big picture, where they want the dollar to be stronger than obviously the other currencies. So that's what's going on. So if you think about it, the Fed raised its rates 75 basis points. The other central banks around the world only raised 50 basis points. I think Japan said we're not even doing it. They have a little bit different scenario over there in Japan, by the way. Their issue is more of a lack of people at the bottom. They got like an inverted pyramid when it comes to their population. Too many old people at the top and not enough young people at the bottom. They brought that on themselves. That's the governments always do that to themselves and make that an inverted pyramid typically, and the economy, if you will, just slowly collapses on itself. It's not like a pyramid, like Japan's pyramid's inverted, and it's not like it's just going to fall over and they're going to have like a Mad Max scenario in like 10 years. It's just going to slowly crumble is what will happen. So with that is that you have the DXY going up, and you have the gold over here is going down. And the gold is 1640. I'm looking at these numbers on a retrace with this leg that it's doing. If it doesn't reverse soon and this just continues to go down, in my opinion, there's some manipulation between this and this going on right here. The DXY and the gold, and that's where it is. In the world markets with the Fed, it's not looking at it like, here's what I'm saying. The cover is that they're saying they're taking care of inflation, which they are. There is demand destruction going on through the housing market, the oil, and the commodities, and it's going on. But that's the cover. That's all. It's always they're telling you what they're doing supposedly for the people, and it's not about the people. It never is, never will be. Inflation is part of the system. There will always be inflation. The dollar has devalued itself against goods and services by 98% since over 100 years. Okay, so that's going to continue to go on. But if this doesn't reverse and this doesn't peak soon, I would say there's certainly some manipulation going on, guys, for sure. And that's what they're doing through the interest rates right here, guys. And it's going to matter how much they're going to raise rates at the next meeting. Is it going to be 50 basis points? Are they going to continue to go 75 basis points, stay ahead of the rest of central banks? Because government here wants the currency to be stronger against the other currencies. So basically what I'm saying is that it's currency wars going on right now, probably more than likely based on the charts. And it's all starting to seep out through the charts right now, guys, is what I'm saying. And then also, too, you want to pay attention to, I'm going a little bit on the negative side. I showed this on my Twitter page about the 10-year notes right here. And this is pretty critical, too, because you can see here on the daily that RSI took out this over here. So this is going to extend, and it blasted right through my target box, as you can see. It went all the way up to what is that? On the 10-year notes, it went up to 3.87. So this is an issue too, guys. The bond market is going through some issues right now, and you're going to want to kind of pay attention to that right here, because this is going to need to go through a reversal. But now that the RSI has taken everything out, how much farther? Correct, and it's going to go up again. So what this means is this extended, that's a third wave. It's going to correct and go up into another wave because it took everything out, eliminating this as a third wave. So technically now you take your fourth wave over here, the overall picture. Now your third wave's right there. They come back down, and now you're going to have something like that, because this would be the third wave according to the daily chart, and then going up like so. Not very good for risk on assets, guys, in this bond market. If you just go through and look at the rest of the bond market right now, the 2 years at 4.12, the 10 years 3.7 basically, and they're just all going up. The 10, the inversion is getting pushed down, and you can see, taking a look at this on the weekly, that the recession is going to be coming, guys, here. So more than likely, here's the 06 went down, went up a little bit, and then you can see this is when it'll start. When this starts going up like that, this is going to be down here, and then when this starts steepening like that, that's going to be the recession, and it's going to be pretty brutal, in my opinion. It could be. It's setting up for that. And I'm looking at the NASDAQ too. Just go over the NASDAQ. To me, still looking at this looks a little bit three-wave-ish. I hope that it is. I know it's a little bit of hopium. I mean, you can get 1, 2, 3, 4, 5 out of that. If this is a three-wave, then there's probably going to be a bounce. But on the daily, it's starting to take out that a little bit on the RSI. Remains to be seen. So where does this stand with Bitcoin? So this is a crypto channel. So we're going to go over Bitcoin. That's a really good question. Do I think it's going to dump like to 10K from here? No, I don't. It's just not set up for that, like a massive dump. Probably sideways action, guys, is what I would think. Worst case scenario, sideways action. But why am I telling you these things? Going over the basics of the dollar, gold, 10-year notes, looking at a couple other things that are out there, DXY and things like that, is that I'm going to say this again, over and over, to save you guys a lot of pain. If the Bitcoin happens to make a pump up anywhere into this area, you're going to want to make sure you exit out. You're going to want to make sure you exit out of your assets. Now, there's going to be other assets that are going to be able to go up. I just did a video on Raven Coin, and it's going to go down, and it's going to be a pump. But what I would do, if it was me, if you're getting any of these pumps, especially in the smaller crypto assets, and you see them like let's say, as an example, you have a crypto asset kind of like Raven Coin as an example. I'm just going to use this as an example. This is not what I'm saying Bitcoin is going to. I'm just saying as an example. Say this is 1.2 on Raven Coin or some other coin. You're expecting it to go up to 1.618. Fibonacci, logarithmic on a third wave, right, would be your target. And then boom, you'd be taking profits. What I would be doing right now in this macro environment, I'd be lowering those targets a lot more. You want to start thinking in those smaller assets with cryptocurrencies, more like what smart money is going to be thinking like, okay? Because there may be some that are in there that know what they're doing, and they'll be taking it early too, considering the macro environment that's going on right now, not only through the United States, but throughout the whole world, right? So you're going to see these pumps, and you're going to want to take them earlier than expected instead of just hitting these fib numbers, because there's going to be a lot that are out there in Twitter. So as an example, like maybe use an asset like like Matic, maybe Matic, you want to take it a little bit earlier. It's just not going to quite hit the fib targets. It might not. I'm just saying that you want to be a little bit on the more cautious, a little bit safer side. That it does go up, complete it. Possibly it might fall short just because of the environment. It'll still go up. Oh, there's this fifth wave. So you take a look at, so let me go over to Matic, right? It'll be like something like this. So I use Matic as an example. So you see how Matic right here was able to blast off. This is an example I'm just using on Matic, guys. You see a Matic just blasted up into this third wave. It corrected into a fourth, and it was just able to struggle off, pulling a fifth wave just like this. Well, why did it do that? So you see this correction here in July, right? And it came back down, and then it made it and pulled it off all the way till the end of December. Well, more or less, there's a correction going on in here, and then Bitcoin and the markets pretty much were finished up right around here in November, right? Came down, and then it was able to pull it off. It's going to be the same thing over here, struggle to make it up. And if it hits fibs, it'll be lucky, in my opinion. And then unless things change, but doesn't as it looks right now, things are not changing. And then, it'll just be able to struggle to pull it off. It'll just be like, like Matic's just going down, and it's going to go up and struggle to go up, take, who knows, 2, 3, 4, 5 months and struggle to get up, do another correction. And then, it gets up there, kind of like this right here in this fifth wave, that lazy fifth wave that it did. And you see its first wave. See how that fifth wave is kind of like the same in the first wave over there down here, and then, so just be aware of that. I could be wrong. Maybe Matic's going to come down, go boom, boom, boom. It could, but just want to put that out there, put this video together for you guys to let you know you want to be playing this. Any upswings on these assets like Matic, because I still believe, even though considering the environment, Matic is, on the road to completing that sequence. It's just going to be a struggle up considering the environment. More likely, it's going to complete the sequence. Now, right here is a different story with gold, okay? Gold could break this sequence, and that'd be this gets broken. This is probably from the Fed playing over here with the dollar and the interest rates, and it could break that because gold is in a bullish sequence, guys. You can see a third wave peak right there. See 1, 2, 3. This is 4 and extended. It's actually a diagonal. Take a look at gold here, right? You want to see a wave 2 on gold? Look at this wave 2 right here on gold. Out of its fifth wave, it went up right here's a wave 1 and it came back. Look at that. So it looks like a 90% correction on this wave 2, 3, 4, 5 is a ending diagonal in this correction with gold, right? This is important because this is probably going to be manipulated, and all the let's see, what are the gold bugs and all the people talking about the end of the world and go buy your gold. Well, the Fed's working against them right now. They want like the whole, like watching some of them, it's like it's going to be the end, you're going to need gold. Well, the price of it's going to be going down potentially if they keep messing with the currencies as much as they are in the interest rates over here. So gold's bullish. You have a wave here on it, and then here, and then up. So it's in a bullish sequence, but they could break this sequence, okay? But it could still come down here potentially. But if it breaks 1640 is what I'm looking at. It's at 1655. 1655 doesn't look good. All right, guys, that's the end of my video. You made it all the way to the end. Drop a like, hit the subscribe button. Peace.